Analysis: oil fees flip greater risky as traders exit the market. New York, London traders and fund managers have left crude oil markets in latest months, dropping hobby to a 7-year low amid the worst worldwide electricity crisis in many years as traders emerge as unwilling to cope with consistently excessive volatility. The exodus of participants, especially hedge funds and speculators, has made day-by-day price swings far more than in preceding years, making it tougher for businesses to hedge against bodily purchases of oil. The volatility has harmed companies that need power market balance for his or her operations, which incorporates oil and gas organizations, but also production and food and beverage industries. Brent crude futures are swinging sharply on a everyday foundation. Between Russia's invasion of Ukraine on February 24 through August 15, the each-day variety among Brent's session highs and lows averaged $5.64. For the identical term last 12 months, the average turned into $1.99, a evaluation of Refinitiv Icon statistics showed. The high volatility is delaying increased capital expenditures that might assist deliver hold pace with power call for, mentioned Arjun Murthy, a veteran energy analyst. When volatility is excessive, oil businesses have much less confidence in rate forecasts, he mentioned. There might be problem that prices should fall again to lower levels that would not justify new capex, Murthy told. Many extraordinary sorts of investors, which includes banks, finances and manufacturers, have exited the marketplace, contributors said, as the market on a few days surges on threats to supply, even as on different days the cloudy financial outlook causes equally wild sell-offs. Overall open interest within the futures market has fallen nearly 20% since the start of the Russia-Ukraine war, in line with facts from J.P. Morgan. Open interest in Brent crude futures at the beginning of August sat at 1.802 million contracts, the lowest due to the fact July 2015, in keeping with Refinitiv Icon facts. The tail is primarily driven by means of speculators, trend followers and macro-focused price range searching out a hedge in opposition to an economic slowdown that is being priced in by means of the market, Ole Hansen, head of commodity approach at Saxo Bank in Copenhagen, informed. The volatility has had an intense effect on groups in 2022, a July survey from Schneider Electric (EPA, SCHN) showed. 24 of 100 companies in industries including electricity, manufacturing and production firms mentioned it has seriously affected their business enterprise, the survey confirmed. 43% of groups stated strength budgets are the biggest operational vicinity stricken by supply chain disruptions that have stemmed these days from the COVID-19 pandemic and geopolitics. The big growth in energy expenditures has created an imbalance in procurement, budgeting, and manufacturing that we're finding increasingly more tough to keep, stated a survey respondent inside the manufacturing and enterprise area. 17% of the businesses said they have been either never confident or simply barely assured in their enterprise's ability to hedge in opposition to destiny volatility. Price swings because of declining market participation. Oil expenditures are shifting around $25 consistent with barrel for every 1 million barrel per day variation in deliver or demand, J.P. Morgan said. That is almost double the $15 circulate earlier than Russia's invasion, it brought. This creates a cycle wherein the wild swings make traders much less inclined to exchange the markets. The amount of open hobby normally begins to fall whilst there may be a variety of uncertainty and path, mentioned Tony Scott, Vice President of Energy Analysis at FactSet. You wait to choose your spots because the basics become clearer on where matters are going. The consolidation may also signal that hedge funds that invested within the marketplace 12 months ago are in reality taking earnings, he delivered. Graphic: oil market volatility climbs in 2022.